Hello, everybody. Welcome to our next segment. Today, we have Wendy Harrison, CEO of First Idea, and also James Burnie, partner of Guardrails. We're going to talk about the importance of taxonomies for crypto assets. Welcome to our guests.
Thank you.
Hi.
Great to be here.
Could I just ask for a brief intro for Wendy first?
Yeah, so I mentioned my name's Wendy Harrison. Background is financial markets for the past 20 years, and more recently be focusing in the crypto space for about just over 2.5 years in helping to define a taxonomy for crypto assets.
Thank you. And James, a brief intro from yourself.
Hi, I'm James Burnie. I'm a partner at law firm Cooke, generally regulated partner, but I've got a practice specializing in anything and everything with blockchain, crypto assets, and DeFi.
Given the breadth of crypto assets in the market today, pegging down regulations that may apply has become increasingly opaque and difficult to achieve, whilst at the same time regulators are looking to impose stringent measures dependent on how crypto assets are structured. For example, crypto assets deemed to be payment or exchange tokens and utility tokens fall outside the regulatory remit. Security tokens fall within the remit in the UK. Being aware of this distinction could be costly. A taxonomy is more than a means of classification. It is also a method of harmonizing information in a consistent format. The consistency achieved facilitates learning, comparison, and crystallizes regulatory analysis, simplifying the identification of crypto assets. Can a taxonomy be to the crypto market what search engines are to the World Wide Web? We just recently saw in Her Majesty Treasury's consultation regarding crypto asset stablecoins. The FCA describes security tokens as providing rights and obligations akin to specified investments, much like a share or debt instrument or units in a collective investment scheme. This would mean in the UK that these such tokens meet the relevant definitions in the Regulated Activities Order. So get us started, if I could ask Wendy, if you could tell us a little bit about your company and Pi Axiom and what it's been developing.
Sure. So, as I mentioned earlier, we're focusing on developing a taxonomy for crypto assets of all distinctions across all classifications. To do that, we have a solution which we've called Pi Axiom. Axiom element stands for a single version of the truth, and that comes down to basically what is a taxonomy. So in this context, we're using it for classification purposes, and as such, anything that you're defining can only appear once in that definition, in that taxonomy. So hence the idea of axiom, that it's a single version of the truth. So what does Pi Axiom really enable you to do? Well, if you do have a detailed definition of across the different crypto assets, it enables you to search for those crypto assets with specific characteristics. And then having identified that data set, then to do comparative analysis comparing like crypto assets at a detailed granular level. So the solution we have is wrapped around the taxonomy element at its core, to which we can then apply regulatory information in terms of what the regulators' view is, like you've mentioned, the FCA on security tokens, and then play that back both to the regulators and also to companies who are interested in either issuing a security token or interested in investing it or want to host it on an exchange. So the taxonomy part is all about looking and identifying and understanding what are these different crypto assets.
Thank you, Wendy. And James, may I ask you, if you could tell us a little bit about the work you do at Cooke and how you came to collaborate with Wendy and her team?
Yeah, sure. So, I mean, I've been involved with crypto assets pretty much since the beginning, because I started by working on the first successful ICO in the UK. And one of the things which lawyers tend to do when they start off is they get something new and then they try and immediately look for something familiar, and then they run the two together and hope they can come up with an answer based on running the two together. So the idea of being able to classify things immediately has an appeal to anyone in the legal profession. And actually, from the very beginning, I had, a very broad brush approach to lumping it into, is it a security? Is it not security? Is it e-money? And that was simply based on the UK legal system. And we've seen from places like Switzerland, other regulators come out and lawyers congratulate themselves a whole lot for basically telling all the lawyers And they've done that by taking the law again and then going that's a classification system. That's not really a taxonomy. A taxonomy goes much further than that. And one of the things which I loved about what Wendy was doing is actually, I can tell you as a lawyer, that's not that's an unregulated token, at which point all the lawyers get bored because that's the end of their job. But actually, there's a lot more to it than that. There's questions like, does it have smart contract technology behind it? What does it actually do? Do the different protocols work together? So if you want to take this seriously and see if it works properly, you need something which does a lot more than what the lawyers do. And that's what I really loved about this, because it's far more than just some lawyer telling you what the law is. It's actually quite useful in terms of how you put this project, these sorts of things together.
Thank you. And Wendy, may I ask you, what are the main categories of crypto assets that need to be considered with separate definitions from both technical and a regulatory perspective?
Okay, so as I mentioned, rule of thumb with any taxonomy is if you're treating it like a classification system, that you can only ever end up with one definition for something. So when we're looking at defining these crypto assets, we don't focus on the regulatory aspect to start off with, because that just muddies the waters. What we're interested in is focusing purely on the asset itself in terms of what makes this different from anything else that's out there in the market. And we're purely just focusing on that. And that gives us our definition. And we start by looking at crypto assets that are likely to have similar characteristics, and then we group those into a particular sort of family. Then within that family, we'll look at things that we call out to be a distinguishing feature. So that could be something that coin in a particular family, they only have that particular feature in that family and not in any others. Or if we change the value of a feature, it would significantly change the nature of the crypto asset itself. So when we get those definitions, we end up with a very concise and comprehensive definition of all the different crypto assets, to which we can then start to review the regulatory side and say, okay, based on their criteria for things like e-money or exchange tokens, what features are they looking for that would place them in that particular group for that regulator in a particular jurisdiction? And this makes it so much easier, because what we're doing here is we're standardizing on terminology. So we're looking at the search criteria that the regulator would look at, and then applying it, running those rules against our database, which will then automatically identify those coins that currently would meet that criteria, which would place it in an e-money bucket for the regulator, or as an exchange token, or as a utility token. And as the flexibility comes from the idea that clearly the regulator's view on things is likely to change over time. And because none of this is hard-coded, it's all rule-based, we can easily adapt. So as the regulator's view improves or it kind of enhances, we can make those adjustments to say, okay, the regulator view has now changed, or they've introduced another classification, and these are likely to be the coins that fit into that group. So the premise is not on starting off with, let's consider all regulations and all across different jurisdictions. It really has to be, from a taxonomy point of view, just focusing on the coins themselves. And that's where I think the power comes from, our tool and our approach, because it makes it so much easier that when you got down to that detail to apply the regulations on top afterwards.
Okay, so focusing specifically on security tokens, which reference a real world asset. Can you tell us a little bit about the work you've been doing with the British Standards Institute, the BSI, and what specifically is BSI's PAS 19668? Sure.
So first idea is just one of a group of companies that were asked to participate in a steering group for the definition of a security token standard. This one in particular was for to standardize the way that security information is captured and publicized to exchanges, for example, to harmonize those definitions. So BSI itself is a UK national standards body. Therefore, the standard we produce it's agnostic to any jurisdiction. The idea is it's an international standard that can be adopted by anyone across the world. So in terms of our engagement, we still meet on a regular basis, and part of that will be ongoing to assess as and when the standard needs to change to accommodate new types of security tokens, and we'll continue to maintain the standard sort of going forward. In terms of what it is, so it has that unique reference number. I can say it's the first of its kind. In fact, BSI would say it's a world first, that there hasn't been to date across blockchain standard for security tokens. And it really sets out the requirements for what is the relevant information that needs to be included, both in terms of technical attributes and as well as the specifics for the security token itself that should be in place in order to publicize that and share that information on an exchange. The advantage of this is that it not only just harmonizes those definitions, but it makes it a lot easier for exchanges then to adopt security tokens and also to do, again, the comparative analysis and understanding what makes these security tokens different. And to help facilitate with the wider adoption, part of what we're doing is we're introducing a BSI module in our taxonomy product to allow people to define their security tokens against this standard and then to identify any gaps and then publicize the information for them. So we're trying to help using our technology around taxonomies to help facilitate and make it simpler for people to adopt this wider standard.
Well, that's fantastic. Congratulations on I know, a great piece of work that's still ongoing and a world first for a standard. It will be very useful to many in the community and particularly market participants. Now, if I may ask James, what's your main focus right now?
So, I mean, we've got a very broad practice, so we're seeing a whole lot of things going through. In terms of the things which are people are most active about at the moment, I would say the money laundering registration regime is a particular focus at the moment, because if you can't get registered for that, then a lot of businesses have a real problem. In terms of things like security tokens, they're quite interesting because I was involved with some of the original tokenization of equity, and what you get with that is you can actually tokenize securities relatively simply. The complication really comes in when you try and put them on an exchange. So there are already exchanges like Merge and the Seychelles, there's Archex now in the UK, which are going in that direction, but that ecosystem is still growing. And that's one of the areas I think the taxonomy might work for an exchange like that, is simply because when they look at new tokens come in, they can see if the underlying requirements of that token fits within the exchange. We're seeing various new models come in around DeFi, and we'll talk about those as well, but we're also seeing a move towards replicating things you might otherwise see in an unusual way. And what I'm trying to get at that is one of the core focuses for the whole blockchain, crypto, and DeFi community we are seeing, and in conversations we're hearing about is going to suddenly become a big issue in the industry, is something we're calling confusion risk. And the idea behind confusion risk, if you do something, does the consumer really understand what they've acquired? And we've seen the start of that, for example, in terms of whether something's an FCA regulated or authorized activity or not. So if you take, for example, MLD5 registration, that is registration. That is not FCA authorization. Now, to a lawyer like me, that means something. To the average person on the street, that is probably a pretty meaningless distinction. But one of the things which is going to be a continuous focus is going to be so that when you go into something, do you really understand what you bought? And the reason this is important is we're seeing things like the ability to get interest in Bitcoin, things which start to look suspiciously like traditional financial products, which, because they are using unregulated tokens, are actually unregulated. And you're going to get attention both in terms of when people use these, do they really understand what they bought? And you're also going to get attention between things like negative interest rates in these products, because you're going to get, well, if I put my money in a bank and it has a negative interest rate, do I instead want to liquidate my holdings, put it into Bitcoin and hold something which then gives me more Bitcoin? So you're getting a kind of rivalry between the two systems. And you're also, that's particularly in the UK, you're also getting larger macro political changes. So you've got the question in India as to whether they're going to ban the private buying and selling of things like Bitcoin. And in the US, you've got the XRP litigation, which again is a question of to what extent the regulators are going to allow certain things. And that's why one of the interesting points about when you're looking at a token is a key requirement is who's participating, where are they based, and that kind of thing. Because, we're heavily plugged into, and we see what's happening at the parliamentary level, and we see what's happening in the regulator level. And, they're trying to regulate it. They want to protect consumers, but at the same time, they want to have a vibrant economy within the UK. So there is no indication they're going to do something like ban Bitcoin or anything like that. If you're in India, it's a completely different story. So part of, knowledge is everything in this particular game. And if you take something like Bitcoin, because even more so, if you know how many people are going to buy and how many people are going to sell Bitcoin at what value, you become a multimillionaire. So really, knowledge, the more you know, the better. And that's why things like this taxonomy give you far greater knowledge. And just to finish up on, what we're also seeing is a split between certain people, for example, fund managers, who focus on just Bitcoin and Ethereum, and those who go for altcoins, yield farming in that group. And again, because we're seeing that split, and what's going to be interesting is whether one of those takes precedence over the other in the public eye.
Yeah, it's interesting you touched on the interest rate bearing element of crypto assets, and this is a recently new phenomenon in the last 2 years, and we've seen just in the last 6 months rapid growth in this space. And yeah, there's the question: if I leave my fiat money in a UK bank, then I get 0% interest. Why would I not swap it into crypto assets and get double-digit interest rates? Well, folks, just be mindful. We know that a lot of tokens aren't regulated, specifically, as we mentioned, payment tokens and utility tokens. But furthermore to that, James, how important is it for both the issuer and the user of these asset classes to fully understand these classifications that we talk about?
So the world here splits into two types of organizations, both which are basically doing the same thing, but branding themselves two different ways. You get the company who turns up and goes, I'm a blockchain company, and that means what I'm doing is clever stuff with your data. And they might use tokens behind the scenes, but you never really touch that. And to give you an idea, one of the things we've looked at is, for example, putting a bond issuance on chain. Now, if you put a bond issuance on a blockchain, yeah, you're going to have tokens. People buy the tokens and all the rest of it. But all that token is it's the right to payment under the blockchain. If the blockchain falls apart tomorrow, then at least there ought to be business continuity plans and the like, which basically protects the consumer, in which case, if you're the consumer, do you really care? Because all you're getting is the payment, and you've recorded that information on the blockchain. The other group of companies are kind of the guys who call themselves the crypto companies, effectively. And in that market, what we've done, the core technology is the same, but we've taken that token, we've imbued it with a kind of meaning, for a better way of putting it. Now, depending on the nature of the meaning we give it and the setup, it can suddenly become very important. So to give you an example on one extreme, if you're an investment manager and you're buying and selling tokens with a view to making profit, the more you know, the better. If you're the custodian holding these things, you want to have an in-depth knowledge from a security risk perspective as to what might go wrong. So, the way I always see it is you've got the guys at one extreme who need to know absolutely everything because they're trying to make money based on that knowledge. At the other extreme, you've got people who basically just want it to work, and they're putting responsibility on someone else whose job it is to have that knowledge. And in between, there's something which is released as a new concept. We call it KYT, which is know your tech. And that is, if you're going to be involved in these sorts of things as the CTO of a company, it's a bit like when you drive a car. You don't have to be able to make a car from scratch. But if the engine's caught fire and there's smoke billowing out the side, you need to know that's not a good thing, and we need to do something about that. So I think we're going to get a rise of the guy who has, shall we say, I know how to drive a car level of knowledge for these crypto assets. And part of these taxonomies to give them that comfort. And the one other thing I would just add is, there's a lot of this is about confidence, particularly when you're starting up as a startup. And if you're trying to deal with, exchanges, banks, and all the rest of it, they have got compliance departments who will look at this and they will go, these things are risky. We know they're risky. And one of the ways we know they're risky is we don't really understand all the risks. So when you have a taxonomy, what you can then do is you can start explaining what the risks are, because as soon as you can quantify risks, you can start moving forwards. And you mentioned earlier about sort of 10% returns using crypto products. Well, these are very risky products. And if you go to the regulator will then go, these are very volatile assets, be careful because prices can drop spectacularly. Equally, they can go up spectacularly. So, you know, what I hate to say is you take on a lot of risk to little return. If you're going to get a high return and you get a high risk, that's a decision you can make. And then the more knowledge you have about that risk, how it's been mitigated, whether you believe that, you know, that is where you get a proper advantage.
Thank you, James. So Wendy, let's change tack here a bit to talk about different jurisdictions. And if I could ask you, you know, in the work you've done, what challenges do you see around different geographic locations with different definitions? And is any of the work that you've been doing with the BSI involved harmonization across these regions?
Sure. So I guess one of the first challenges you're going to see is on terminology used. And part of what a standard will do is help sort of start to standardize the use of certain terms and have around that a definition. So any standard that we've worked on obviously has a glossary of terms. And one of the outcomes of doing a taxonomy as well is to generate a glossary of terms. So that is key. And I see that as quite fundamental when you're considering it across jurisdictions. There's we start calling a definition for decentralized. What do we really mean by that? And we kind of need some consensus at that level. Otherwise, it's very hard to get consensus on what these particular coins are and what the technology underneath it represents. So I see that as being key. Like the World Wide Web, there is no global overseer for any of this crypto market. So we're just going to have to accept that whatever definitions come out for various jurisdictions, that's going to be the norm. You're not going to see necessarily a global jurisdiction kind of, I mean, there might be something for Europe, but it's not going to be on a global scale. So that's going to be the norm, that we are going to see differences in how they treat those different crypto assets and their definitions for them. But that said, we can go a long way to helping with standards like the one we've done for the BSI, and also through other global organizations and trade bodies like yourselves, CryptoUk, can help promote the use and adoption of standards, which can be used on a global scale. And that will help standardize the terminology and in terms of, and give some firm foundation to help with this kind of concept of different definitions across jurisdictions. So while the law itself will be different, if we can at least achieve that consistency in terms of the terminology being used, then it is going to go a long way to helping people both learn and understand what these different assets are, learn the lingo in terms of that's being used, and then come away with at least a detailed knowledge of what it is they're getting involved into. And I see that the standards and trade bodies and the regulators themselves can play a part in helping to promote that.
Mm-hmm. It's part of the ongoing work we do at CryptoUk, as you mentioned, is education across the piece, especially with policymakers in government. James, may I ask, in your experience at Cooke, are you seeing different actors coming to the table to discuss projects with you? And if I may ask also, are you talking to any folks in the decentralized finance, so-called DeFi space?
The short answer is yes and yes. I mean, what's been quite interesting, so I mean, I started in the space before people knew about it. When I started speaking about it to fund managers and the like, they all looked at me completely blankly, as in, who are you? What are you talking about? You're an alien look. Then I got the slightly quirky entertainment look. Then I got the slightly worried look. And now I'm getting the maybe we should be in this look, if you see what I mean. And we're seeing a sort of move towards firms you've never heard of, who just want to do the first thing because they want to be the first this, the first that, to people then talking about we want to raise the standard in the sector. And now we're getting people who are kind of established businesses walking in and improving it and trying to grow the whole thing. In terms of DeFi, always an interesting 5 minutes, that one for me, because I was involved in a whole lot of DeFi projects before they called themselves DeFi, so they've now renamed them DeFi. DeFi basically means one of two things to people by and large. And as a result, it's actually quite confusing because we're talking about two completely different ideas in the room. The first idea is the cyber libertarian type idea, which is basically, we had this previously at the beginning of the internet, this is decentralized thing, no rules apply to me, I'm above everything, I can do whatever they like. And I had one or two people turn up in my life and go, I want to break every law on the planet, it's okay, I'm decentralized. Can you write me a legal opinion to give me the okay on this? And I went, that's not quite what lawyers do. We try and help you comply with the law rather than announce you're exempt to any legal system. So that, and people keep flicking back to that. And there's also an issue there around privacy and AML, because there's a huge push at the moment towards bringing transparency. So if you're bringing DeFi just not to play with AML, good luck. I wish you the best. I have a low expectation. The other form of DeFi, which I think is far more interesting, is the question of resilience. And to give you an idea, and I think it's particularly come out of COVID, but I think COVID's really put an impetus behind DeFi. I've been involved in products where what we do is we basically give everyone within the ecosystem a role. And the idea is, if a bomb is dropped on any of those participants, the rest of the ecosystem can keep moving, and it doesn't really matter because we replace the bad actor with the good actor. And this creates a whole lot of really interesting ideas. If you take something like COVID, if your central bank has a attack of COVID or whatever, so is out of commission, then the whole of the rest of the thing can keep going. And that brings resilience. It's great to see. It means that, the chance of a Lehman Brothers style crash destroying the economy is reduced. These are all great things. But we then get to my favorite bit where, I become the least popular person in the room, which is, what do we mean by decentralized? Because I'm very keen on something I call legal entity dependence. And what I mean by that is, if you take virtually any blockchain ever created, it is dependent on something. 99.999%, that's a company or someone like that. Even if you take Bitcoin, which is supposed to be the ultimate decentralized platform, technically that is centralized around all the people in the world who hold Bitcoin. So there's an element of centralization there, because if everyone holding Bitcoin stopped doing it, then there would be no more Bitcoin, if you see what I mean. For most projects, it's actually far narrower than that. You'll point to a particular administrator or the onboarder or the person whose job is to keep it going. At that moment, you're dependent on an entity. And then when people go, can we get away with not being compliant with the law? Can we do something odd and all the rest of it? You're sitting there going, well, actually, if I wanted to control this, all I have to do is control that one entity, and I can control the whole thing. I can't control the blockchain, but I control the person who controls the blockchain. And because I control him, I control the entire blockchain. So the whole DeFi thing is brilliant branding. But my question is always, it's like stablecoins. It sounds great. It has a meaning, but how real is it? Because actually, most DeFi isn't really DeFi. It's more decentralized than most things. It's from an academic's purist perspective. You can argue it's fully decentralized because technically anyone could take over. But as a matter of practical reality, it's really contingent on a single entity. And as soon as you take over the entity, you take over the whole thing. So I love operational resilience. I love the idea of having things decentralized. I'm cautious on the idea it's some magical way we're above the system and a sort of still you can't see me type way, therefore I'm above everything. And also I just had the very expensive projects. I was involved, I had someone come into my life and went, I want to be decentralized like him because he's one of the original guys and he doesn't have to apply any laws ever. And I actually acted for the person he was talking about, and he got a legal opinion in every single country in the world where he was operating to say what he was doing was legitimate. And that is a very expensive hobby. So if you're going to do decentralized, be decentralized within a group of jurisdictions where it works, if you see what I mean. And this is where your lawyers and your marketing team shouldn't be allowed to meet each other, because your marketing team can then say we're decentralized, and your lawyers are making sure you actually are decentralized within a central globe, for want of a better way of putting it, a central set of jurisdictions.
Right. Well, if I may ask the following question to both of you. So around predictions for for the next year, where do you see the growth of security tokens in 2021? And where do you see the standardization of technical attributes, for example? Wendy, do you want to take a stab at this first?
Yeah, sure. So I guess, so the question is, will we see an acceleration from analog to digital assets for crypto markets? I think, yes, we will. I think that will continue. I believe, though, there is still an ongoing dependency here for transparency of regulation, especially for the large institutions to kind of get involved. And that's kind of been a bit of the hold up at the moment in terms of the regulatory landscape being a bit opaque. Especially for sort of like security token sort of market. But on the side of that, though, is that client demand is only going to continue to grow, and so that's pushing companies, the financial institutions and exchanges, custodians to respond, because there is clearly a demand for this kind of digital asset token. So in a nutshell, I think, yes, it's certainly going to grow, and it's also being pushed by initiatives like ESG and green initiatives, which again, you see an explosion of those kind of products that are aiming to be in that sort of in that sort of category for being offering a green investment. And also the growth of CBDCs is also, I think, spurning the capital markets to sort of sit up and take note and say, right, now could be the good time. But I think underpinning all of this is the regulatory stuff, is how transparent is it? How easy is it to understand what the regulations likely to be for these kind of digital assets? And how do I ensure that I'm being compliant for the different jurisdictions I operate in?
Same question to you, James.
I think blockchain is to exchanges what the bio is to the fountain pen. You can do it all under the old system. The bio is slightly better, and people are just going to get so used to it that they won't see it as particularly special if you use it. There are certain things which sad people like me find absolutely fascinating about the use of blockchain in the use of markets for securities. Just things like every time in Europe when you do a transaction, you have to report to the trading venue. You can automate all that using blockchain. That's a job done. It's a major cost saving. Everyone's highly delighted. You can take an Apple share, tokenize it, and sell 1,000th of an Apple share, which means that new people can buy into it. And it means if you're a fund manager, you can get exactly 23% of your fund in a particular asset class rather than having to worry about whether it's this, that, or the other. There is an entire existing infrastructure which is built, which would have to move across. And that is not an afternoon's undertaking. And they have to get used to it, and they have to get up for it. But I mean, there are already, the main stock exchange for the Seychelles was already fully on chain. Switzerland is moving everything on chain. Archats in the UK is on chain as an MTF. So we're seeing this being built and built and built. The real key moment here is going to be the moment when people get liquidity on these things, because I've tokenized lots of things, and they always go on like, how much aggressive, because it's magically more liquid. And you're sitting there and you're going, well, it's represented in the blockchain. That doesn't guarantee you liquidity. What guarantees you liquidity is people buying and people selling. And until you get that, the rest of it's all academic. And liquidity is something that even existing exchanges all suffer from. I mean, it's not specific to crypto in the slightest. But what you're getting with this is you're getting infrastructure which on its surface should encourage greater liquidity, because it means it's easier to do new types of things. But until that liquidity exists, it's never going to be able to dominate. And that shift is where I think we're going to go in the next couple of years, because to be completely blunt about it, there's a lot of money to be made in providing liquidity. And you've now created a potential for a very lucrative industry, and that will push everything through. And the other thing I would just add is, going back to this taxonomy idea, one of the interesting things we've seen is if you're one of these exchanges, you can automatically appear onto another exchange. And what you can then do is, if all the exchanges are on a blockchain, they're all compatible, you can move from exchange to exchange in a far faster, slicker, cleaner way. And then the other thing you can do, just to finish off my total geek out, and apologies, is even if you're going to sell us something, so if you take just fund units, at the moment, what you do is you go to a lawyer who then goes to all these other jurisdictions and writes all these disclaimers, and you get this huge pile of words at the front which no one really reads, which is basically the same in every jurisdiction. What you can do using the taxonomies and the like is you can automate all of this, so that when you go into a jurisdiction, it goes, that URL from that computer is France. right, French need the following disclaimer automatically puts in. So you can automate the whole security issuance. So that when you get this pulp, a document which is 80 pages might be near 60 pages, which I agree is hardly the world's most exciting job, but it does make it easier. And it means there's less for people to read, and that makes things faster. The other thing I like about it is, it's encouraging, bluntly, lawyers to behave better. Because if you look, a lot of the documentation, if you're doing like a bond, a lot of that documentation is pretty much the same for every single type of security. And I wanted a client who had this trick whereby the documentation for what he was creating was the same every time. You filled in 4 boxes and it gave all the relevant documentation. It cut down all that lawyer reading through thousands and thousands of pages because we read it once, it was on a blockchain, we knew what it was going to be every time. Because a whole lot of the documentation and things is pretty pointless documentation. And when you read it, it's really just, is it the usual documentation we expect, or have they slipped in something nasty? And lawyers will spend hours reading something saying, have they slipped in something nasty because they're not very nice people, to put it another way. And that you can all save money on. So, it's technologically moving compliance and legal in the right direction, for want of a better way of putting it. And that I think is really exciting. And I think there's real cost savings to be had. And I think, they all say you never see a revolution happens, but when it does, it's really quick. It's one of those. It's going to be a quick, silent revolution. And it's not going to be, front page news, we're all very excited, all that kind of stuff. It's just going to happen. And there's going to be a generation who grew up. And it's a bit like, I'm currently talking on a laptop. There's a generation who never knew what a laptop was. We're going to have a generation who look at us and, of course we know what blockchain is. It just happens. And we take it for granted the same way, we take emails for granted. And there was a time when I was younger when emails were all magical and wonderful and all the rest of it. And sadly, they've lost all their magic to me, which probably shows an embitterment.
Just to add to James' point now, I think this is where the work we're doing with James and Cooke in terms of providing the regulatory overlay has a real benefit for helping that kind of automation from the compliance team point of view, because what we're doing is making sure that you're treating Litecoins or that you're offering your portfolio in a consistent manner for the different jurisdictions. And so therefore any restrictions you then impose, you can automate and say, well, okay, if this is another cryptocurrency and it's very similar in these characteristics and we're offering the same jurisdiction, then likely these rules are going to apply and therefore our restrictions should be the same. And you can only do that, get down to that level of detail, if you understand at a detailed feature level what those different assets are. And then it makes it much easier to apply the regulations, your own personal restrictions in terms of your own company, who you're offering it to from a target market along the lines of MiFID. All of that thing comes into play. It makes it so much simpler.
Yeah, and look, to the point of geeking out, we appreciate the discussion around financial market infrastructures, and I would urge our Coinscrum listeners that wanted to geek out on the current Treasury consultation talks a lot about blockchain and DLT specifically helping and improving financial market infrastructure in the UK. So please take a deep dive into that at some point. All right, well, that's it from Coinscrum Markets. Thank you to James and Wendy. Where can people get hold of you, Wendy?
So they can get hold of us on our website, which is www.firstidea.co, and that's first with one ST, idea.co. All the information about the sort of services and products we offer all on our webpage and long contact details. Or if you want to email me direct, it's wendy.harrison@firstidea.co.
Thank you. And James?
I'm very active over LinkedIn, so you can reach out to me over LinkedIn, or my email address is james.burnie, that's BURNIE, at Cooke, GUNNERCOOKE.com.